Valentine's Day is my day.
I'm wearing red, although it's kind of a dark red. My P&L is in the spirit of Valentine's Day today.
Ha ha! It's okay.
What's happening, everybody? It's your boy Chicago Sean McLaughlin, joined by my friend Steve Straza, the head technical analyst here at All Star Charts. What's happening, Steve?
Hey man, how's it going?
Oh, I thought I'd get in the spirit of the Valentine's Day today, and actually, my account wanted to get in the spirit. My P&L is as red as the day.
Like I said, it's only one day. Hopefully you return to green tomorrow, post Val.
Thank you, Mr. Bull Market shirt. Let's talk about that shirt real quick. I know you got a lot of fans out there who love the Bull Market shirts. So what are we sporting today?
Actually, this is not one of my bull market shirts. This is my Miami shirt. It's my Miami Vice shirt. So
Oh, okay. Don Johnson coming over today?
no, but when I take trips up to Miami,
Straza lives the Key West lifestyle down there, for those of you who don't know. For wondering,
not
what the hell is he talking about?
but not to say it's not a bull market. It's still a bull.
Okay.
I
All
run.
right. So before we went live today, this is the Flow Show, by the way, where we look into unusual options activity and see if that can lead us down a rabbit hole into some good trades. And before we went live, Straza said to me, I got some good stuff for you today, buddy. So what do you got, man? What are you all excited about?
Before we kick it off, this is just what I'm thinking about. It's completely unrelated to the Flow Show and what we'll talk about with unusual options activity in a minute. But so George Soros just revealed a pretty big short position in Silvergate Bank. Right, we've been talking about this one with the large short interest. So he just revealed a position through puts, right? But he's very short. Stock is moving higher 15% today, and really like after that news came out, because I went back to check. It wasn't ripping this morning. It's up about 15% now, I believe. When no matter the bad news, because this stock in particular has been embroiled in controversy, all sorts of issues and accusations of fraud related to the FTX fallout for months now. The negative headlines, particularly over the past several weeks, have been insane, but the stock won't go down. So when a stock refuses to go down on bad news or bad earnings or bad whatever, it tells you something. Just like when a stock in an uptrend can't go higher anymore on a good earnings report or on good news, right? It's exhaustion. I think the sellers are exhausted here. If George Soros coming out betting against a stock can't knock it lower, I mean, I don't know. You've been around longer than me. If Soros is short something, it should move lower.
Well, I've got a couple of thoughts on that. Number one, I always tend to be skeptical of getting all excited about
Who's
hearing
doing
about some big trader's position, some trader who had a lot of success another time. Like Michael Burry comes to mind, right? Like you hear about Burry all the time. He had one great trade, and now it's like every time he takes a position, everybody thinks he knows something. Like, no, he doesn't.
this
And
is
so, look, Soros has earned our respect. I get it, but I'm not going to go getting heavy short Silvergate just because Soros is in it.
I wouldn't. Right. But I do think just the headline alone that they can't knock it down. When Soros releases a short position, it's like Carl Icahn or somebody. It's usually a big deal.
Right.
Just the tape is very interesting, right?
I do find it hilarious that a 15% move in Silvergate, you really got to squint on a daily chart. If you look on my screen right now, you got to really squint to see that. I got to zoom in pretty hard to see what a 15% intraday move looks like. Oh, there you go. Okay, now it looks like something. But whew, had to really pull out the magnifying glass for that one.
Log those scales, would you?
Log scales, yeah.
So no, so that's what I'm thinking about this morning. These short squeeze names keep working. I know it's probably getting pretty obnoxious. We've been talking about it a lot. But that's what's
Keep
on my
working.
Hmm?
They keep working, so why not keep talking about them?
It's the right time, it's the right place. It's not always a great environment to look at these heavily shorted names, but there comes times when that really is the thing to do. I think we're there now. There is one on our list today, right here at the top, Beyond Meat. Huge short interest, and options markets participants seemingly getting more short last week. We had a nice base there. We resolved higher, and then we just fell down right back into the box. So I would rather, not short this one. It's more of a sideways trend than a downtrend. If this was bullish flow, I'd be more interested in buying it, but I just thought that was interesting and a nice transition.
Help me read that right there. Is it saying that there was a large sell order on the bid of calls? Is that what I'm seeing?
Yeah. So short and calls.
Okay. Okay. I mean, look, that's a bearish bet, but it's not an aggressively bearish bet when you're selling calls, right?
Move on.
Moving on.
So coal stocks have been, we've been talking about them since early, mid 2020. They really ripped off the COVID lows here. You can see in my chart. This is a custom index that we put together because there aren't many coal names. We no longer have a coal ETF like we used to, KOL. They delisted it right down here in the fall of 2020, which was exactly when we needed it. That tends to happen. We created our own. Look at this nice base. Strong primary uptrend. This is what you call bullish consolidation, right? It's a continuation pattern. We want to earn the direction of the underlying trend, which is higher. Think this eventually, resolves to the upside. Peabody Energy, which is ticker symbol BTU, just reported earnings, I believe, yesterday. The street loves it. The stock is ripping. It's been consolidating since, the first quarter of 2022. So you got 1 year of sideways here. I love this setup. I think 29 is the level, and I just want to be involved. I have orders out right now. Let me see. I got filled. So I'm in some calls. I'm in next month's calls. I'm in the March calls right now. I'm in the
That's why you were hitting me up on company Slack earlier this morning saying, hey, what's the vol look like in BTU options? Because you were getting sneaky long over there.
So you didn't answer me. So now tell me now in front of everybody. Should I have not bought these calls?
No, you should have. I mean, if you're bullish, which you are for good reason, and the vol, I've got it up on my screen right now. I mean, look at the volatility. They're coming out of earnings that just collapse. We're right at the bottom level. So these are the cheapest calls have been all year. I mean, if I was getting long here, I would want to get long calls too. That's the right move, buddy. Well done.
All right,
What'd you buy? What strike?
How would you do it? I'm in the March 1735s and I'm in for 40.
So you got the you bought the 15 Delta calls. Aggressive. You're going for a long shot here.
You know me.
All right. Well, I mean, that's not how I would have played it. I'm not saying you're wrong. I'm not saying you can't win.
It's a sweetener for me. I'm already long the common. I'll probably add more today also, but I think we're entering a move. I think we're getting a leg up.
Well, Straza, again, I'm not saying you can't make money on this trade, but if it were me and if I did the trade, because the volatility is so cheap, I wouldn't have bought in March. I would have gone way out. I would have gone maybe into July or January because, with the prices being as they are, you're getting it's much more affordable to take a longer term bet, which just increases your odds of success. It's not going to be a quick hit, quick home run, but it increases my odds of success, giving me more time for the trend to play out. If it were me, I might have looked into these January 45 strike calls. You can get them for under $2. I don't know. That's just me.
No, and that's the beautiful thing about what we do, right? It's a free market, so I can buy more and have these also.
It is indeed a free market, Straza. You can do what you want with your money.
So would you go out? How would you craft this?
I would either, depending on how far I want to go out. I mean, I like the 45 calls in January if I decided on January. If I didn't do January, I would do July for sure. And you can get the 40 strike calls, which is what you bought in March. But for July options, you could have got the 40 strikes for about $1.25, I would guess. I think that's the way I would play it, probably. I think I like July. I like the price. I don't think 40 is too far away.
There's also a really large jump in interest there.
Somebody knows something, Straza.
No, but the volume in all these chains today is pretty interesting. People seem interested.
Yeah. No, I like this trade, and I might look into putting this trade on tomorrow. And I do. I mean, if I had to put a trade on right this second, I'd probably do this strike right here, the July 40s. I feel like that's the right move. But the beauty is, Straz, that we could both win. You're just more up against the clock than I am. That's all.
Yeah, absolutely. But I would like to have exposure further down the line also, because I think this one is going to keep working. Here's the thing with a stock like this. So BTU, if you take it back to 2020, and this is, just hear me out. It moved higher by almost 4,000% off the 2020 lows. So it was trading for less than $1, ran to over 30. Okay. So that's what we call well-deserved digestion of gains, right? It's gone sideways now for a year, but this primary uptrend is no joke, right? This is the real deal. So when it does, God forbid, that primary uptrend reasserts itself and we get a leg higher, you want to be involved. Timing that, when this current consolidation actually goes, that's another story. So you're not wrong at all to go further out, give it some more time. I'm making a bet that hopefully this thing really rips. Now, if it does, boy, my calls will really pay me. But yes, I'm going to be biting my nails a little bit if we don't start moving pretty soon.
Well, if I know you, I know that you, while you took kind of a long shot, short dated call position, you didn't put your whole account in it. You were responsible in your position sizing. If it turns into a zero, it's just going to be like any other trade, no big deal, right? And that's the key.
A couple $100 and I'm in the common too. So not the end of the world. Can I show you another one I like this week?
Of course.
So oil services, you're on all of our calls. We like them a lot. They keep working. This is the group. It's been the leader in energy, continues to be the leader in energy. This chart shows it really well, right? We have XLE here up top, overlaid with XES. XLE is the large cap energy sector spider. XES is the oil and gas services ETF. You're already getting new highs from XES. I think XLE follows, but we want to be in the leaders. We had a really, good looking chart pop up on our scan this week. MRC Global. This is an oil and gas equipment and services stock. They're hitting the March 17th, 1250 calls on the offer. We have a very clear level here at 1225 and some considerable upside. 10 points of upside, almost a double.
I had a little bit of a whoopsie at the open today following earnings, but it's mostly recovered. So if you see on my chart, there's a pretty ugly candle today, which is not shown on your chart there.
It's really just a big wick though at this point.
No, I mean it's recovered well, so that's the good news. But it looked like at one point it was pretty ugly.
Yeah, so you're not wrong at all. This thing got smacked at the open. But 1225, if that's our level, we're at about 1267 today. Maybe this was just a nice opportunity to get in. I don't know.
Yeah, I mean, if you were opportunistic and you were active at the open today, you definitely got some bargain prices. I like it. From an options perspective, I think actually I'm not sure that this has really good liquidity in the options. Let's
Probably not. It's small.
Yeah, I'm looking at it now. These options are pretty trade by appointment, it looks like. Not a whole lot of open interest. The bid-ask spreads are pretty wide. So from an options trading perspective, probably a no play.
$1 billion cap. So
what's that?
It's $1 billion market cap, not a big stock.
Yeah.
Look at what the ones they were active in last week, March 17th. What's the open interest there?
We got open interest of 3,800 contracts at the 1250 strike.
That's what put it on our list. There you go.
Yeah. Well, look, maybe this is a good time for this discussion because I get asked this question a lot when let's say you want to really, you're aware that the liquidity is pretty suspect, right? But you still want to play with the options for whatever reason. Either you want the leverage or you just don't have the type of buying power to buy the stock. Whatever the reason, you can still play this. You just have to be aware of a couple things. You have to be aware of if you're getting into, let's say, buying just straight calls. If you're getting into it, you have to, and we say this all the time, but in this case particularly, you have to be willing to lose everything because if this thing turns on you, those bid-ask spreads are just going to widen out and, the only way you're going to get out is hitting the bid and you're going to take a bath. So you might as well just assume that whatever you pay, you're either going to win or you're out. Or you're a total loss. And you can do that. Like I'm looking at these March 12 and a half calls right now. They're bid 70 cents, offered 95. If I wanted to get in here, I'm not sure I would pay 95, but I might work a limit order at 80 cents and see if I can get filled. And I'd size my position knowing that I'm going to lose everything if I'm wrong. Hopefully I don't, and hopefully I do have an out, but you have to be prepared for that.
And you can fish around when you have a huge bid ask like this. You can fish around with your broker, throw something in the middle, closer to the bid. Watch the last trade price if there is one, and kind of feel it out, feel the waters out. Another thing I'll say, these are the options we're looking for, right? This is really what this scan is trying to do. If you just look at this chain here on your screen, look at the open interest, 0, 0, 0, 0, 10, 100, 40, and then 4,000, right? Someone, for some reason, said, despite what you're just saying now about how big this spread is, said, forget it. I want this leverage. I want to be in this. And they went and made that splash. And that's where, option scanning doesn't have to be crazy complicated, especially in low liquidity names like this. This stock barely has an options market at all. But whoever wanted to put this bet on was willing to take that spread.
Yeah.
Right.
And it's probably whoever put that spread on or that trade on created the tighter bid-ask spread that we see now, because if you go to the next month out, same strike, look at this spread. It's 75-cent bid, $1.95 offered. Same strike 1 month later, or actually that's 3 months later, but still. So just the fact that somebody came in and took an aggressive position, that tightened up the spread, because now we got players. We got people with interest here. Look, it can be done. When I find myself wanting to get into a position in a instrument that has low liquidity like this, definitely I don't want to be doing any kind of spread trade, because the more legs you have, the more unlikely you're going to get a good fill. If you're going to play it, you got to play it just, buying the calls or buying the puts. Just keep it simple, and fully accept the risk if you're wrong. And if you're right, great. If you're like, here's the other end of the spectrum we haven't talked about. Let's say you're right and you kill it. This thing trades up to, let's say, $20, and your 12 and a half calls are way in the money. Well, on expiration day, if you're still in those calls, you might find yourself also with another wide bid-ask spread. If the stock's at $20, the calls will be worth $7.50, but you might see a bid of $5 and an offer of $10, because again, the liquidity is very suspect. But that's okay. It's not the end of the world. In that situation, you could just exercise your calls and take the stock and then sell the stock.
Yeah, no, that's great advice. So how about, crafting something where you're selling puts and something like this with this wide of a spread? You'd never want to do it, right?
Never want to do it, because, imagine that you were short the 15 puts here in February. Look at that bid-ask spread. Let's say you're short from $1.95, and the bid is at $1.90. But if you wanted to cover in a hurry, you're paying $2.90 to get out, even though that's not the fair value.
Let's explain this for people, right? When you're selling options, you're getting the bid, right?
Yeah.
That's going to be what comes into your account. That's money you're taking in. When you go to cover those very same options, okay, you're going to buy them back at the ask. So this is where this spread we're talking about really comes into play. It's on both sides, and that could get obviously very ugly if, they're
right. And by the way, we should also point out that when you're short the options and they're going in the money against you, you have to cover them. And so you're going to pay whatever the market's going to let you pay. Whereas if you're long options and it's going against you, it's like, all right, well, I'll just let it go to zero. Fine. No big deal.
Never sell puts in something like this. So that's all I had today. I was talking all this big game, like, I got this great slide deck, these great ideas.
Look, don't be hard on yourself. This BTU trade, I think, is something here. I'm going to keep this on my radar. I like this trade a lot. I think I'd like to see it maybe poke its head above 30 before I get involved. But this could be a big one. I like this.
30 is the big level. 29 when we measure it back and use the fib. Then you got the all-time, or not the all-time highs, but the cycle highs at about 33. If this thing takes out 33, the reason I'm in 35 is you're easily going to see 35, I think. It's a very high beta name. When it moves, it moves. It's as cyclical as it gets. And coal stocks have been a great place to be, and they've been quiet for a long time. but I think they're going to continue to be good.
Well, ladies and gentlemen, if Peabody takes off, Peabody's going to turn Steve Strazza into a busybody. Getting active, he's going to get it all excited, and he's going to be crowing about his big win. I love it.
Another thing we talk about, though, too, that's worth mentioning, earnings are behind it, right? So you don't have to worry about that for another 3 months. Big report. Wall Street likes it. I love to see that. And it's breaking trend a little bit if you drew a little short-term trend line on that. So,
yeah. All right, folks, there you have it. The trade that we like the most today coming out of the Flow show is BTU, Peabody Energy. Strazza's already in. He's aggressive. Me, I'm a little bit less aggressive. I'm going to wait for some confirmation above 30 before I get involved. I'll probably play it longer dated than Strazza did. Hey, we could both be right here. Depends on, what do they say in that old video game? Choose your fighter. So who do you got? You got Strazza or you got Shawnee on this one? Short term or long term?
pick your trader.
That's right. All right. We're off. We're done. We'll talk to you again next week. Everybody have a enjoyable Valentine's Day. Hope it's good to you. And we'll see you next time. What's that?
Happy Valentine's Day, everybody.
Yeah. Happy Valentine's Day. Thanks, bud. I appreciate it.